So today we are discussing our chapter number 11. Chapter number 11. And the chapter is called Environmental Management Accounting. And just to start off, Environmental Management Accounting is an attempt to sensitize management accountants about the impacts their actions have on the environment. And once they realize that impact, they're now expected to take actions that will ensure that they conserve the environment. They take actions that will ensure that they conserve the environment. So basically, that is what we call environmental management accounting. This has gained a lot of momentum in the modern day. And if you look at even in the government circles, there is a lot of effort being put to sensitize people on climate issues, on environment issues. It's not long ago, we had a very big conference here in Nairobi, an international one, the World Climate Summit. And we have had a series of other meetings. And people are talking about carbon dioxide emissions. People are talking about global warming. People are talking about how we need to deal with the issues of environment. And that is the reason why, even now in education, you find that almost every subject, there has now been emphasis on environment. I've actually seen, even in the new CBC syllabus, they have a unit called environmental studies, because people are coming to the realization that our survival is based on the environment. And if we continue doing what we do conventionally without taking care of the environment, soon we will be in a lot of trouble. We are all witnessing what is happening. Like, I think currently there is a lot of high temperatures. I think it's South Sudan. I saw the day before yesterday that they have suspended schools because temperatures have gone so high to around 42, 43 degrees Celsius. So people cannot be in school. I was talking to another colleague of mine who had traveled to the western part of the country, Nyanza, was telling me it's too hot, that they are not even able to do what had taken them there. And even those of us who are here in Nairobi, you can bear me witness, too hot. These are temperatures we have not been witnessing. Look at even the issues of climate, rainfall. Just a minute, I respond to Mwalimu here. Mwalimu. Okay, so I was saying that there has been a lot of emphasis on issues of environment. Now, coming down to the notes that we have, Environmental management accounting is defined, and maybe before even I go further, I need to note that this is an area that the examiner has shown a lot of interest. It was not introduced a long time ago. It has been there for a few years, and almost every sitting, the examiner has brought a question from this Casmo area. So that means most likely when in your sitting, he will bring a question. But I'm not saying it's a must, so you don't misquote me. I'm only saying that the history has shown that since they introduced this topic in A.M.A, they have never missed a question. If history is to repeat, then you can be sure after him can tell. Now, this is defined as the identification, correction, estimation, analysis, internal reporting, and use of material energy flow information, environmental cost information, and other cost information for both conventional and environmental decision-making within an organization. So what that means is that we are supposed to identify, then we gather, then we estimate. We have done cost estimation, we analyze, then we prepare reports about how energy flows. Energy, if you look at something like this power that we are using here, how has it come now to my house? Just basic understanding, you know, they have gotten some water somewhere in a dam, like Daruma Dam or Dakaine Dam. No, Dakaine, we don't have electricity generation. At least we have Kidaruma and many others. Then that water has been used to turn some turbines. Then they have generated electricity, and it is here in my house and your house, and we are using it. So how has that come? And even that water, for it to go to be gathered at Kidaruma Dam, where did it come from? It came from a forest somewhere, maybe in Mount Kenya, another one in Mau Forest. How did we have those catchment areas? There were trees that were planted. So you are supposed to follow that cycle, the entire ecosystem. How does it flow? If it is a paper like this one, this book that I'm using, how does it get to me here? Basic knowledge tells us that a tree was cut somewhere, it was prepared, and the paper was made somewhere in Webuye paper mills or whatever, and the transport was done, and here I am with this paper. After I'm done with it, it is headed to my dustbin. From my dustbin, the garbage collector will take it, then go and dump it to the Dora dump site or whatever, and after that, it may find its way back to the environment. So that cycle, it's what now we are told we need to identify, we correct data, we estimate, we then report the information about how the energy flows, how it affects the environment. As we make our conventional are the normal decisions that we make for accounting and whatever else, but as we make them, we also take care of the environment. Now, environmental management accounting offers an opportunity for accountants to develop services they offer beyond the traditional core activities. As in now, we are told to do more, slightly more than what we normally do in care of the environment. And the benefits of environmental management accounting include, number one, when we study environmental management accounting, we have the ability to track and manage use and flows of energy and materials, including the wastes. So we are able to do that. Then we are able to correctly identify and manage or reduce cost. Like now, you see, maybe even in your company, when they send emails, they put a disclaimer down there or an advisory down there that you don't need to print, or as you print, take care of the environment. Why that is so is to ensure that we do not use a lot of paper. And the less papers we use, then the less trees we cut. And the less trees we cut, the more our catchment areas remain unaffected, the more waters flow from there, and we do not have issues of struggling with water and anything else that is related to water, and the issues of carbon dioxide emissions and so on and so on. Then we are also able to get more accurate and comprehensive information for the measurement and reporting of environmental performance, thus improving company image. So when we are able to deal with the environment, we improve our image, we do corporate social responsibility, we assist the local communities, the government. You saw the other day when the government had announced a tree planting holiday or day. Organizations came up, they branded their t-shirts and whatever else, they came in to plant trees. Some gave a lot of money because everyone is called upon to conserve the environment. The other thing is that business activities have environmental cost, and we need to look at how we can deal with that when we are generating all this. So those are the advantages. Those are the advantages. I think here we need to change this one. Okay. So now then we are saying that business activities have environmental impact, such as consuming raw materials and so on. I think I've explained this. And the accountants are called upon to help in this management because they have the necessary skills. An accountant has the necessary skills to do these things. One, they are able to monitor and measure and control costs. Number two, they're able to manage environmental systems so well. They're able to come up with budgets. You know, we are part of the people who make the budgets. Actually, we are the main ones. Then we also help in implementing the strategies, and we also provide highly regarded advice. The advice from an accountant is highly regarded. Now, the environmental costs, which you're saying we need to estimate, you can identify them in two ways. One, you can look at the general ledger, the books of our company, and you identify. Actually, nowadays, we have a branch called Environment Audit, and this has even seen the strengthening of bodies such as A.M.A. To an extent that nowadays, before you do a project, the government must come in through A.M.A. to do environmental impact assessment. Then you can also have a face-to-face talk with whoever is concerned with the management of the company, and they will tell you what, even society, they will tell you what is affecting society. Now, the main environmental costs that you can be able to pick include the waste and the effluent disposals. If you have been to Nairobi, then you know about the Nairobi water river, how it is affected, issues of water, issues of energy, issues of transport, traffic jams and so on, emissions of those fuel, whatever. Then the consumables and raw materials. And this is one of the things that made the government to ban the plastic bags that we were using some years ago. And they are no more because those are environmental costs. So basically, that's what we call environmental management accounting. This is a question from the past papers. I had not identified exactly it is which year, but it's there, you'll find it, even this one. Now, from there is something else called ex post variances. Now, ex post variances, they are variances that we compute to capture what we call change in environment, to capture what we call change in environment. When we are computing variances that we computed, what happens? We get the difference, either favorable or adverse. And maybe if you look at what I have here, if, for example, I want to go to town, if I want to go to town and I'm using a matatu, I can think when I'm in my house before I leave that I'm going to pay 50 shillings. But when I'm thinking I will pay 50 shillings, I am thinking that there will be no rain. There will be no rain. But after I have left my house and I'm almost there at the bus stop, then there is rain. And when I get that there is rain, the matatu guys hike up the fare to 90 because there is rain. So I board the mat and go to town. Now, when I do my variance analysis, I report a 40 variance adverse. Now, if this money I had been given by someone and that person wants to hold me responsible, now that I have reported an adverse variance, I should be punished. But now I'll be left asking, why am I being punished this way? And I'm not the one who brought about the rain. Rain is beyond my control. So the ex post variance analysis comes in and says that when we compute this conventionally, the ones that we have been computing, the very many that we did, we also need to look at, was there a change in the environment? And was that change within control of the person who was responsible? Remember, when we looked at performance measurement, we said you must observe the control principle and judge a person based on what they can control. So here, we are then going to break the variance into two. The first one is called planning element, And the planning element captures what is uncontrollable. So this one will say it is for sure there was rain, and this guy was not responsible for rain. Now, because of rain, he should have paid 60. So the variance now should be the standard minus what was expected to be paid when there is rain, you get 10. Then we look at the efficiency. Efficiency element, it is the one that looks at what is it that this guy would have done. Hata kama he found there was rain, would he have waited for a little bit longer? Would he have decided to negotiate with Makanga? Would we have decided to walk a few meters and maybe catch up a cheaper matatu? So all those things were within my control. So when we say we compare now this 60 and the actual that I paid, we get that. So this is the one that now I should be punished on or for, not this one. So the ex post variance breaks the conventional variance, this one, into two. The planning, which is beyond control, and the efficiency, which is within control. So looking at our notes, you can be able to clearly see that, that these are variances whose actual values are compared with standards which have been revised to reflect the changed environmental conditions. Now, this aims at comparing like with like, and hence making performance measurements fair and acceptable to all. The conventional variance is broken into two components. The planning element shows the uncontrollable variance computed as the difference between the original standard values and the revised standard value. Then the efficiency element shows the controllable variance, which is computed as the difference between the revised standard and the actual value. Now, the ex post approach also requires that we capture the opportunity cost. So that is how they are computed. This is a past paper question. I guess, no, I think I have gotten it somewhere, but we may not look at it. Maybe during blocks, we shall look at them. Okay, then the other thing that we need to look at is called non-financial performance measures. And remember we said when you are doing performance, you must look at the quantitative and the qualitative. You must look at the financials and non-financials. So we computed the variances. Variances were all quantitative. We looked at, these are the measures, return on investment, residual income, economic value added, all those were financials. But we said you also need to bring on board the non-financials. So we are saying the non-financial performance measures are expressed in non-monetary units. For example, something like competitiveness, product quality, and so on. The other very, very important point is that non-financial measures complement. This is a very, very strong point. They complement the management tools. They make the financials to be complete. And they usually relate to the following functions. One is manufacturing. If you want to gauge how manufacturing and production is performing, you look at the complaints received against your product. So if you find that the complaints from customers are increasing, it tells you that you are doing poorly, and the opposite. You look at the measurement of scraps. If the scraps are increasing, then something is wrong in the production. You look at fault analysis, the same stock turnover, the weak stocks that are held. You look at if the closing stocks continue to increase, it means that you're not making sales, but the opposite is also true. When you look at something like sales and marketing, that department, if you want to appraise it, some of the things you can check is what we call customer satisfaction analysis. This is where, and I'm sure you have seen this, you visit a place and those people, after you have left, they send you a message asking you how it was. I normally see it even with these apps. When I use Uber or Bolt, when you are requesting for the next one, they will ask you to rate. Now, when you give them that information, they now look at it and they are able to judge how many people are saying this, how many are saying this. And based on those results, they are able to tell whether they are doing well or they're not doing well. The other one is sales per 100 customers. What happens here, you need to look at the customers who come to your shop. And these customers are divided into three groups. Group one, they are fellows who just come through the door. They look around, they talk to no one, they leave. They don't even buy. Category two, they come in, talk to your people, but they don't buy, they go. Category C, they come in, talk to your people, they buy, and they go. So of 100, you need to know how many are category 1, how many are category 2, how many are category 3. If you realize that category 1 is more, like out of the 100 who came in, 90 just left. You need to check even the faces of your salespeople, even the painting around. Does it appear scary? Do they appear scary that people just pop in and they sense danger, they leave? You need to check on that. Again, if you find that category C is high, that everyone who comes in must buy, then most likely it means that your sales team is doing very well. The other thing is the strike rate. Strike rate has to do with how many you turn into orders, how many inquiries. Like at our place, we normally have a book where we record inquiries. So every now and then, or maybe at the end of the semester, we need to look at how many people came to make inquiry at our reception and how many of those finally became our students. If you find very many became students, it shows that the front office people are doing a good job. But if only a handful, very few, a small number became students out of a big number of inquiries, it shows that our front people are not doing well. So you need to look at that. The analysis of basic salaries and commissions, you need to look at how much are you paying your people. We know that the more the money, although not always, but it's also a very strong fact, the more the money, the higher the chances people are likely to work well for you, are likely to put more effort. Delays in deliveries, are we delaying? Repeated lost sales, are we able to lose sales? Or how many are we losing? Someone had requested to be given something, then later on they cancel. We need to check on that. The other thing is human resource. You look at human resource, and in human resource, we look at things such as the mix of staff. When you go to a company, how many men and how many women are there? Do we have a balance, or it appears that we just have one gender, or we have one gender dominating, or even one tribe dominating, or even one age? You need to look at what are the dynamics. And there's something that is even in government circles. There is a commission called National Cohesion and Integration Commission. They will once in a while give us data. I think you saw the other day, it's not long ago, when the recruitment that KRA had done last year, it was stopped by the court because they say 2 tribes represented 58%. And you know, we have 43 tribes. So now they were saying that mix is not right. So you also need to look at the workload analysis, how is given what. Obviously, we do not do the same work, but there are still some ways of judging whether there are some people who are oppressed and others are favored. The other thing is labor turnover. If you find that people are going, leaving the company, something could be wrong. But if you find that those guys never leave, it shows that the company is doing well. Absence from work, watu kushida not reporting to work, they keep on missing what they should be doing, something could be wrong. But if you find everyone is almost there every day, and even those who are absent, they have very, very clear reasons, they have explained, that's fine. The number of applicants, if we were to do a job advert that our company is employing, how many people will respond? Now, the how many respond is a show of the faith that people have and the desire to work with you. If you find very many people have applied, it shows that you have a good name. But if you advertise and no one is willing to apply, it shows that your name out there is not trading well. Staff evaluation, you need to do a performance appraisal and check what are the reports. Then finally, we have the issue of research. When you are doing research, we need to check, is the product going to be acceptable? It's just like what you people ask, or all of us ask. When I started this course, is it marketable? Will I get a job? That's something you need to look at. The achievement. What have you achieved? Like you people now, you have been in class. These are the morning. And there are people that maybe you have not been giving them the attention they deserve. Maybe at the family level, at the work level, because you're in class. So after you have done the exams, those people will ask you, what were your results? What did you achieve? Yeah, and if you tell them you passed, they will encourage you to go to the next one. But if you keep on telling them you have not achieved, they may tell you then, we endelea kufanya kazi, wachana na hiyo maneno, ama we endelea kukaa hapa utuhudumia kama mwanafamilia. So we need to check the achievement. Then we also need to check, was there market need analysis? Whatever we are doing, do you think the market requires? Like now, you people, you're pursuing accountancy course. Do you think the market requires accountants? Yeah, so was there a study that was done? That's something that we need to look at. So those are the 4 functions that you can measure using qualitative aspects. Now, that's also a part paper question. You will find it. It is vital that a business appraises both financial and non-financial, like that I said. And there are 4 main tools that are used. The first one is balance scorecard, which I believe you have done or you will do in the leadership and management. So for me, I'll discuss these other 3, the Fitzgerald and Moon's building block. But balance scorecard has some questions. When we start revising, you'll see. But I'm going to rely on your knowledge from leadership and management. Then we have the 3rd one, performance pyramid, and the 4th one, which is called the performance prism. Now, the benefits of these models, the 4 of them, are that number 1, the financial and financial performance measures are included. They include all of them. Then they are linked to the corporate strategy. You'll be seeing that. Maybe if you have done balance scorecard, BSc, you know that at the center we do the vision, mission, and the goals or the objectives. Then from there we spring 4 spheres. So they are all about the strategy. Then they include external measures. They also include all important factors, or most of the important factors. They show clearly the trade-offs between the different dimensions of performance. And then they show how managers are motivated. Now, looking at the Fitzgerald, they looked at the business and divided it into 3. There are 3 segments. So 1 is what we call dimension. Now, in the dimension, this is where we look at what we call the critical success factors. For the business to be successful, what is it that is required? And they came up with these 6 items. 1 is that there must be competitiveness in terms of quality, in terms of location, in terms of price, and many other things that can make you competitive. Then you also look at financial performance. You look at your sales, your costs, financial ratios, your profits, and so on. Then you also need to look at the quality of service. And when you're talking about the quality of service, quality is in the opinion of the receiver of the service. It's not in the opinion of the provider. So you need to check, what does my customer think about what I do? The issue of flexibility, you must be flexible. Can you be able to adjust to the demands of the customer? Or you are so fixed that what you provide, you can only provide when you provide. Resource utilization, how well are you using your resources? And the innovation, are you coming up with something new? Or you are just bragging with the old things? So those are very, very important aspects of any business. Then the second thing that they came up with is called standards. The standards like the ones you have been using in the computation of variances. And number 1, they talk of the ownership, that these standards, they should be developed based on what we call participative approach, so that everyone owns them and they will be able to support them for the success. When there is participation, then we can be sure that we are coming up with standards that are achievable. We don't set targets that are so high and eventually end up discouraging people. The targets must also be fair, especially like now, these ones that we are calling advanced, whereby we say people can be punished or people will be punished. Then you must ensure that the standard was fair and it was never meant to harm anyone. Then the rewards, the 3rd dimension or the 3rd thing, is that when people report positive variances, they should be rewarded. But in regard to rewards, you need to be very, very clear. It must be clear that you can only qualify for this reward when you do this. Yeah. And then it must be motivating, whatever you are giving. You see now, if my salary is like 200,000, and then you are telling me that my bonus for the whole year, when I have performed well, is 2,000. Now, those 2 things cannot motivate me, or the 2,000 cannot motivate me. So you must look at something that will motivate. And again, at the same time, you look at a reward that is affordable. So the other thing is controllability. can the person who is going to receive the reward control the results? Can they manipulate? If I know that if I do this and this, I can get these results. Can I be in a position to manipulate and give false information? Those are things that you need to look at. So all those things that I've talked about, they are here. The KPIs, the CSFs, the rewards here. So you look at them. And the advantages are the building block considers determinants of success as much as possible. And then it is able to motivate staff. Then we have what we call the performance pyramid. Now, this performance pyramid, it looks at how you can be able to achieve the vision of the company, how you can be able to get good results, and in a cascaded way. So they give us this pyramid here. And it all starts here at the vision. Now, the corporate vision is what we call level 1 of management. Now, this corporate vision, when you have a vision, for example, you say, I want to start a college, that's your vision. You must know who are you targeting, the market, and how much money do I require to start the college. So when you have the vision must first be broken into these two. I want to target those who are doing CPA. I require this amount of money to set up the infrastructure, to market the school, or to do this and this. And this one, we call it level 2, or the divisional or the strategic business units. Now, once you have clearly defined your market and your financials, then you now down further, whereby market is divided into 2 more segments. One is customer satisfaction. This is where now you'll be asking, what will I do to satisfy these CPA students? How flexible will I be? And in answering this is one of the reasons why nowadays we are teaching very early in the morning, like we are doing now. Many years, we only used to teach during the day. We only used to teach during the day. But as our customers went to job market and they could not now be available during the day, we started teaching in the evening. Then again, in the evening, it became difficult. Some could not fit. So we brought the early morning. Again, we also have some people who cannot even fit in the early morning. They cannot fit during the day. They cannot fit in the evening. They can only be found on late evenings. So we have some colleges that teach late evening. Some others cannot even be available on that late evening. They are only available on weekend only. So all those are issues of flexibility, trying to ensure that our customer is satisfied. Then the financial is also broken into 2. One is again for flexibility. We have decided we are going to charge maybe 20,000 or 22,000. Can we be able to adjust that? We need to look at that. Productivity. Productivity has to do with what is it that we shall be generating from a particular unit of resource. That is a question we need to really look at, and it affects finances. That is now level 3, which is called business operating systems. Now, coming to the lower level, the customer satisfaction is broken into 2. A customer is satisfied when you give them the quality that they require and you deliver on the time they require. So it's not just delivering quality. It's not just giving quality, but do you deliver when the customer wants? Yeah, that's a major thing. On flexibility, you need to look at the delivery. When do you deliver? And the cycle time, when are you teaching the cycle? Yeah. Then on productivity, again, you also need to look at the cycle. Can you do the 24-hour? Can you do the early morning, the day, the evening, the late evening, the weekend? And then are you ensuring that there is no waste? There is no waste. So now all these are further broken into 2. We have the external effectiveness and the internal. Now the external are things that affect the outsiders. You see delivery, quality, customer, a bit of flexibility, and the market, and part of the vision, they affect the external. But in the internal, we have the cycle time, the waste, the productivity, the financials, and the... So that is the pyramid. And as I've discussed, again, you can see that discussion here. You can be able to follow. Finally, we have what we call the performance prism model. And this one is, it tries to capture everyone who is involved in the business. One of the major drawbacks of the pyramid, is that it concentrates on 2 groups only. It concentrates on the shareholders and the customer. it ignores the other people, and the other people are the workers. A business has three stakeholders. We have the workers, we have the owners, and we have the customer. So the pyramid considers the interest of these two only. But the prism comes in to consider all the stakeholders. It considers everyone, not only actually even workers, anyone who is affected in some way by the business. And this is done like this. We develop a model where we come up with questions and then we provide answers. So number one question is, who are our key stakeholders and what do they need? Like when we look at Destiny Technical Training Institute, who are the stakeholders? We have the lecturers, we have the students, we have the parents, we have the government, we have the owners, we have the landlord, we have the people who operate around there. All those are stakeholders. And what does each one of them require? A lecturer like me requires a salary. A student like you requires to be taught well. A parent requires their children to be taught well. The government of Kenya is waiting for taxes. The landlord is waiting for rent, and so on and so on. So you identify each stakeholder and exactly what they need or what they want. Then from there, you come up with the strategies. So what strategies are we going to put in place so that we satisfy the lecturers, we satisfy the landlord, we satisfy the students, we satisfy the owner, we satisfy our neighbors? You come up with those strategies. Then you come up with the processes. What is it that we are going to do? How are we going to implement our strategy? What is it that we are going to do so that we achieve those strategies? Then that which we are going to do, like when we say we are going to teach so that our students pass the exams and teach well and complete the syllabus, what capabilities do we have? Do we have teachers who are qualified? Do we have rooms? Do we have internet? Do we have books? Do we have a place? So what capabilities do we have? That's a question that you need to answer. Now, once you have answered that question, then we still go back to the stakeholders and then ask them, you as a landlord, you require rent from us. What is it that you can do for us? You as a student, you require to pass. What is it? What is your responsibility in this? You as a lecturer, you require salary. What is your responsibility in this? Yeah, so we involve everyone. We get what they need. We get the strategies, we get the processes, we get the capabilities, and then we also bring them on board. We tell them, hey, you guys, you don't just wait to be taught and pass. There is something you need to do. You don't just wait to teach and be paid. There is something you don't, the Kenyan government, you don't just wait for taxes. There is something you need to do for us to succeed. So that is how the debate is supposed to be coined. And that brings us to the end of our today's lesson and to the end of our syllabus. Not unless you have any concern. Abdullahi, are you okay?
Yes, sir.
Good. Noor? I can't hear you, Noor, if you are talking. Ask her.
Yes, sir.
Good. So thank you very, very much. We have come to the end of our syllabus. So we have captured everything that we should have captured. You can check your course outline. We are now supposed to begin the revision. But I want us to have a break. So we will not meet on Saturday and on Sunday. We will not meet on Saturday and on Sunday. We now go to next week. So those two lessons, I want you to settle down, look at the notes, compile them, go through them, so that when we come now to start the revision next week, God willing, at least we'll be from the same page. The second point is that we are not having enough time because you know the exams are on 22nd, so we cannot do much. But you can boost your chances in two ways. You can go to my YouTube channel. There are some videos that I had done for revision. You just get there, you search for them. They are, I think I did them like 2 or 3 years ago. but they're still very, very relevant. Very, very relevant. You can get them there. And that would be for free. Alternatively, you can get the revision kit that goes for 1,500, and that will also boost you. Then the third point is the revision. I'm going to be revising paper by paper, starting with the paper of last sitting. And if you want to benefit more from such kind of revision, it is advisable. You will have attempted those questions in advance by your own, so that when I come to revise, at least you know what to ask, what not to ask. Yeah, or you are able to flow with me. So as much as possible, attempt those questions, starting with the paper of last sitting, going backwards up to where time will enable us. So that is all from me. Thank you very much for being my good students in the course of the semester. So let's meet during blocks. When you get the channel, make sure you subscribe. Make sure you write a comment. That's very, very good. Thank you. See you next week now. So we are not meeting this Saturday. We are not meeting on Sunday. We now meet next week, straight to revision. Thank you.